Hello everyone, and welcome to this Your Overseas Home webinar on wealth management in France. My name is Julian Benson and I'm a writer here at Your Overseas Home. I'm joined today by Remy Hart, a senior wealth manager at Holborn Assets. Holborn Assets is a leading financial services company with over 20,000 clients. So Remy spends his days helping expats around the world plan their finances. As much as we may want to focus on location and what our new home is going to be like when we move to France, we also need to take time to prepare for what it means to move our money abroad too. And that's what we're going to be discussing today. We'll begin with a presentation from Remy, but today is really about answering your questions. So please use the window on the right side of the screen to message me your questions and comments, and I'll put these to Remy after he finishes his presentation. Also, just as a last piece of housekeeping, if you need a reminder of anything that we discussed today, or want to share this webinar with family and friends, there's going to be a recording of the webinar that will be available on the Your Overseas Home website. And we will also email out a link to the presentation to the email that you registered to attend with. But anyway, that's all on the housekeeping side of things. Remy, if you wouldn't mind sort of introduce yourself a little bit, but then dive into your presentation when you're ready.
Shall I open it up, Julian? Thanks for having me today. Is that clear on the screen? A nice picture of the Eiffel Tower?
Nice.
No, guys, always a pleasure speaking and giving as much information and insights as I can to France from a financial planning perspective. I think there's today's speaker, just myself. There you go. Well, a bit of an introduction to myself. I'm currently sat in our Spanish office in the south coast of Spain. As Julian nicely touched on, we're one of the largest and leading wealth management firms globally. It's Holborn Assets. I'm a senior wealth manager here, albeit I'm 36 years old. And predominantly, I specialize in looking after expatriates in France and Spain. They're the two main jurisdictions that I operate in and have a good understanding of the tax and legal framework and essentially the best ways to sort of structure assets and look after clients. We're a wealth management firm. We're not just a sort of brokerage. We don't just set you up with investments, savings vehicles, pensions, and sort of leave you to it. We do provide an ongoing service. As I mentioned, I'm a fully qualified financial advisor. I hold a QFA designation through the LAA in Ireland. Holborn Assets, we're licensed and regulated to give advice in every jurisdiction we operate in. Now, we operate in over 150 countries. As Julian said, we have around 20,000 clients. I certainly don't look after all of them. We have around 500 employees worldwide now across 18 offices. I think around 3 or 4 billion under management. There's a lot of reasons I work for Holborn Assets. I've been around a long time, highly reputable company, and highly licensed and regulated for clients' perspective. That's the most important thing, is investor protection and security. And we're an independent company, albeit quite a large one. We're a family-owned business. We're not sort of tied to any major bank or institution. But enough about myself and Holborn. We'd always recommend doing any due diligence on myself or any vehicles that I recommend prior to sort of moving forward. Today, we're going to talk about tax-efficient savings and investment vehicles in France. Now, that can vary quite significantly depending on your nationality or your country of residence. I'm going to focus a little bit on advice for British or UK expats as well as US expats. But essentially, as a company, we deal with pretty much anyone and everyone. This is a lovely slide on why choose France. I don't work for the French Tourism Board, and I'm sure you have your own reasons to move to France. I get a lot of properties pop up nowadays from our partners over here, and it's always in the back of my mind. But yeah, beautiful place to live, great food, great sun. We don't need to touch on that too much. And just to be very clear here, I'm a qualified financial advisor for the firm of Ford. I'm not a tax advisor. We do work closely with a lot of professional contacts in that area. I guess just to give you an idea, that's the first of the stepping stone, right? Looking at a house and looking how you enter the country. Again, it varies depending on where you're from, what your nationality is. If you're lucky enough to have an Irish passport or obtain one, it certainly makes life a bit easier. But we'd recommend speaking to a visa and immigration specialist just to ensure you're going down the right path because there's different visas for different people. Again, without touching too much on them, speak to the specialists and the experts. Regarding tax and residency, this is an important sort of pre-planning part to think of. Now, again, I'm not a tax advisor, but I deal with this on a daily basis, and generally speak and look after clients who are in France, but obviously assist in that transitionary period. So it's important to be mindful of when you become a tax resident in France. Give you examples: if you're selling property in the UK or the US, moving to France, for example, the calendar year in France is different to the US and the UK. Calendar year in France is January the 1st to December the 31st. Take 2025, for example. If you plan to move to France later in the year and sell your UK house, you have to ensure that you don't become a French tax resident this year. Because if and when you sell your UK house or US house, for example, you may be exempt from capital gains tax in your country of residence currently, but if you became a French tax resident during that year, you will be eligible for capital gains tax in France. They're going to tax you on your worldwide income. So it's just be mindful of when you're going to move. So, a rough estimate would be ensure you're in France after July the 1st. You become a French tax resident as of 2026. If you liquidate properties, investments, pensions, whatever it is in your home country, you'll still benefit from the tax exemptions in that country and won't have any declarations in France. You just need to ensure that you don't become a French tax resident. And obviously it touches on how you're declared as a French tax resident over 183 days, your main home, your main job, your spouse, your children, your life activity in France. Again, I'm not a French tax specialist. I certainly specialize in looking after and structuring wealth in a tax efficient way. So, we focus on tax efficient income, succession planning, and again, we'll touch on that throughout the presentation. So, first slide here is just regarding UK expats. Now, again, I'll touch on US expats and anyone and everyone, but what a really important point is for UK expats is to look at alternatives to ISAs, premium bonds, general sort of savings accounts with the UK. Albeit these might be great, a unit trust, for example, certain investment portfolios, as UK tax residents, they may be beneficial, there may be tax benefits of holding these. Once you move to France, they hold no benefit at all. And what we do as a company is specialize in alternative tax efficient vehicles in France, or globally, to be honest. But for me, myself, a big part of that for UK expats is looking at assurance fees. Now, I think there's 60 million assurance fee policies in France. Something like 60-70% of the adult population have an assurance fee of some sort. Now, that's the best way, to simply put it, to structure your assets from a UK perspective. Again, this is a UK-based advice. This isn't formal advice as well. It's always done on a one-to-one. Just to give you an insight into the benefits of an insurance fee, very much like it's tax to pay, so there's no tax to pay until you take money from the policy. When you do take money from the policy, it's very tax efficient. You're only taxed on the gain element.
Remy, I'm just going to interrupt briefly, sorry. Your microphone seems to be cutting out a little bit on this slide. Would you be able to step back a moment? And you were telling us about the assurance fee, and then as you moved over to the next slide, your microphone cut out. Sorry about that.
Okay. No problem. Do jump in. I've got some new headphones on. Noise cancelling headphones, so I'm in the boardroom trying to dodge the rest of the staff, albeit it's 6 o'clock. Assurance fees, essentially we're looking at the benefits, and these are specifically designed for British expats. It's the best way to hold and structure your wealth as a direct comparison to a UK ISA. So the benefits include a tax-free allowance of €4,600 per person. If it's a couple, €9,200. After 8 years of holding an assurance fee, only being taxed on the gain element. So when taking a withdrawal, you're only taxed on the gain element. So obviously it's negligible in the early years, especially. No tax to pay until you take from the policy. Very important part. Compare it to a UK ISA. If you're in France, no issue generally holding a UK ISA. If you then decide to take money from that ISA, you're going to be taxed on the whole amount. You only want to be taxed on the gain element. So a nice example, you have £100,000 in an assurance fee, and these are available in sterling, euros, US dollars. And let's say 12 months time, the policy grows 5%, your £100,000 is now worth 105,000. We say, Remy, I want to take the profit. We process a £5,000 withdrawal. You're only taxed on the gain element. So if you look at the gain element of that £5,000 withdrawal, again, without getting too technical, 5% of that is taxable. So £250 of that £5,000 withdrawal is taxable in France. Now, depending on your nominal rate, let's say a flat fee of 30%, you may pay £75 on a £5,000 withdrawal. So, as I said, very tax efficient from an income perspective. Again, just to sort of reiterate, on a one-to-one basis, we need to ensure that an assurance fee is the right structure for you. We need to complete a fact find, a risk questionnaire, work out your objectives around income requirements, succession planning. Now, there's no better tool, simply put, to establish your wealth from a succession planning, from a legacy perspective, than an assurance fee. The tax benefits of establishing that assurance fee in France as a British expat are second to none. Each beneficiary within the assurance fee will get a tax-free allowance of 152,500. So if you think you have 3 children and you put €500,000 into an assurance fee, each children is going to get 152,500, completely exempt from tax. This sits outside of your estate. So there's no long drawn out probate. Can be set up as a joint policy between married couples on a joint life, last death basis. So an easy way to pass money between spouses. Essentially, if one passes away, money is transferred into the sole name of the last remaining spouse. When both policyholders pass away, monies are then distributed to your beneficiaries. You can name any number of beneficiaries. They all have that tax-free allowance. Now, this only applies to policyholders under the age of 70 to establish that assurance fee. You still get benefits over the age of 70, but it's reduced down to 30,500. Again, talk to me. We'll run through your situation and see what's going to be best. Obviously, from a withdrawal perspective, very tax efficient. We can look at a wide range of assurance fees. I did a webinar yesterday with one of our partners on a low risk, pretty safe and secure vehicle that just generates 5-6% a year. And look, get in touch with me. I can send you a copy of that. It's an hour long, but it's quite detailed. Currency flexibility I touched on. Again, most British expats will have their currency, their funds, ISAs, savings, premium bonds in sterling. Currency transaction, you can establish these in sterling. You can take policies in euros.
So I was to say, your microphone just cut out there when you switched onto the withdrawal flexibility section. But so if you're able to start that from there again, sorry about that.
Maybe I have to get some new headphones. So regarding currency and withdrawals, you have the ability to invest in an assurance fee in sterling or dollars or euros. Now, a lot of the assets British expats hold are obviously in sterling, in ISAs, and premium bonds and savings. These can be transitioned into an assurance fee in sterling, and monies can be taken in euros. Obviously, if you want to get away from sterling, if you're unsure about the sterling, then get involved with Smart Currency or the currency exchange platform to transition that money. But currency has been a volatile place. I'd certainly get a specialist involved to look at that. And again, depending on the objectives around your investments or your savings, comes down to matching you up with the right assurance fee vehicle. There's higher risk, low risk, medium risk. It all comes down to having that initial conversation. Pensions, very important topic for UK expats. Again, we'll get to the US, we'll get to people around the world. Now, UK pensions, essentially, the options at the moment are somewhat limited because recently Labour government have come in, they've put an overseas transfer charge on any overseas transfers for pensions of 25%. So we don't get involved in that anymore. Anyone who advises that, I would check the regulatory framework of the company they're advising you from. So generally speaking, we look to amalgamate all work, occupational, private pensions into one easily manageable pension. And we normally look for an international. We keep it onshore in the UK. This allows you ongoing servicing and ongoing advice for someone to help structure your funds and take withdrawals. Julian, can we hear me loud and clear?
I'm afraid you cut out slightly on this one. So you were saying that 25% on any transfer, but then also you mentioned sort of checking the regulatory framework, and then at that point you cut out, I'm afraid.
Blimey. Right away then. Why don't we switch headphones? Guys, apologies for this. See if this works any better. Can you hear me, Julian?
It's coming through very clearly now for us, yeah.
All right. Well, we'll scrap the AirPods.
Okay, so regarding pensions, look, we specialize in the transfer of UK pensions, simply put, occupational, private, self-invested pensions in the UK, but we don't transfer those overseas anymore. We have a pension transfer specialist team who look at amalgamating those into one easily manageable pension, and we tend to favour the international SIP. So keeping it onshore in the UK, but allowing ongoing servicing and advice, bit of currency flexibility. Now, the most important aspect for a pre-planning move to France would be to take the 25% tax-free lump sum. Very important, similar to selling a house. If you become a French tax resident and take your 25% tax-free lump sum, yes, it will be tax-free in the UK, but France will tax that as part of your worldwide income. So just ensure you do that as a UK tax resident. But yes, speak to us. We'll look into your situation, look at what pensions you've got, what assets you hold, and we'll formulate any advice on the back of that. But UK state pension, still claimable, available in sterling or euros. Again, have a conversation with us to look at what the best options are for your existing pensions. Generally speaking, state pensions, government pensions are locked in and tied to the UK. You can obviously still receive those, but you'll declare those as tax. There's a double tax agreement, so you're not going to be taxed twice. You just have to declare it. This touches on US. Now, I'm personally not a US specialist advisor. We do have a US arm to the business operating out of our Spanish office. One of our senior advisors I work closely with, Jacob Shelton. I've got a link to his diary at the end of the call. But similar to the UK, we're getting a lot of inquiries. I don't know, maybe since November, there's been a lot of traction on people moving to Europe. And that's where we come in. We can help help look after your assets. Now, compared to the UK, where we advise to restructure your assets, restructure your pensions, generally speaking in the US, you're always going to declare tax in the US. So we would tend to favor leaving existing 401ks, IRAs in place or brokerage accounts. And generally speaking, we'd look to manage the portfolios. As a cross-border advisor firm, we have licensing and regulation to give advice to US clients in the US and in Europe. Once you leave the US, similar to the UK, you can't technically be advised by your advisory firm or your advisor. So that's where we come in as expatriate advisors. And look, there's plenty of options and scope for advice for US clients. I've been working closely with Jacob on a few clients of mine and who are US connected, and there's a lot of scarcity in the world around markets at the moment. Now, we can obviously sit in your existing portfolios and run and manage the money, but a lot of people are leaning towards annuity type vehicles where they want zero downside risk, they want regular fixed income, and they don't want exposure to markets. Obviously, there's a lot going on in markets. I'm not going to touch on that too much in today's call. It's more about the structuring of wealth, but have a conversation with us. We'll understand how you have your assets arranged at the moment, what your objectives are, and we'll formulate some financial advice on the back of that. We don't charge for initial consultations, completely free of charge. We essentially will determine if we can help. If we can help, we'll prepare and send any advice and get a chance to run through that in a video meeting like today. Just run through it step by step so you have enough information to make an informed decision. There's no pressure, there's no obligation to take our advice. If we can help, great. That's essentially what we do. So I think I've just touched on that briefly there. My email is there, quite small in the corner. Guys, feel free to send me an email initially if you just want a bit more information. If you want to watch the webinar on assurance fees for British clients, then certainly ask me for a link to that. We have a recording live on YouTube on our Holborn Assets account. If you want to have a direct conversation, an initial consultation, my diary there, speak with anyone outside of the US. Again, it'll be a Zoom call, so that'll give you a direct link to my calendar. Feel free to pick a convenient slot. And the purpose of that call will just be for me to sort of reintroduce myself, run through your situation. I'll go through what we call a fact-finding process, allow me to paint a bit of a picture of how you have your assets, and then I'll send my advice off the back of that. Again, if you're US connected, if you have US assets, if you're in the US, if you're moving to France, if you're in France and have US assets, book a call with my colleague Jacob. Again, he'll happily have a consultation with you, see how your assets are arranged, and see if he can help. Again, he'll send any advice off the back of it. Julian, I've sprinted through that presentation because I was unsure how much of was getting picked up, but I hope I've covered up a few important points.
No worries. That was fantastic. Thank you. And like, actually, I've got lots of questions of my own, and also some questions coming from the audience as well. In part because, like, so some of these vehicles you were talking about seem like the sort of thing where they should probably be planned fairly far in advance. I mean, like, say I'm in my 50s, I know I plan to retire to France. And say that was going to be in 15 years' time. At what point is it sensible to actually get in touch and to start thinking I should be restructuring these things?
In 15 years' time, absolutely not. No. Keep your ISAs in place, keep using your tax exemptions to add to pensions, for example. As a UK tax resident, they're the right structures to hold, right? We don't advise on that. We don't deal with that. But it's more important if you're moving, let's say, Q3, Q4 this year or Q1 next year, to begin these conversations, because obviously there's steps to take, right? If you have the retirement accounts or pensions, taking those lump sums, but also the beginning process of liquidizing ISAs or unit trust or investments for that transition to an assurance fee. You know, we can establish an assurance fee once you have a property in France, and then begin the transfer of money. But again, 6 months, 12 months after that, we happily have a chat, but you know, within a year's time, generally speaking, is a good time to talk. Yeah.
That's good. Actually, and just to clarify as well that I've got it right from how you explained it. So with the assurance fee, say I had put 500,000 euros into that and out of 5 different beneficiaries, then there would be no tax paid on any of that money when it went out to the beneficiaries.
Well, Julian, you look under 70 years old, so that's the important part. And yeah, this sits outside of their estate. So under Napoleonic law in France, every child will be allocated 100,000 euros tax-free exemption. So generally from the liquidization of a property, for example, or some savings in France, whatever it is, this is outside of that estate. So, you know, if you look at that 500,000 euro box, as it were, once you pass away, money is liquidated to whoever is named as the beneficiary on the policy. And yes, up to 152,500, completely exempt. That's a generic assurance fee structure. So, you know, there's different variations of the assurance fee, but that comes down to matching up to someone's risk tolerance and income requirements and so on. Yeah.
Fantastic. So we've got a couple of questions are starting to come in now. So one of the first is there an annual limit on the amount one can contribute to an assurance fee? And can you contribute after you've passed 70 years old?
Yeah, very much so. If you establish the assurance fee prior to the age of 70, the benefits are useful. Once you start making additional contributions over the age of 70, they're going to segment your policy. A certain amount will be tax-free exemption, and a certain amount will be under a different bracket. Basically, 30,500 is your exemption at that point. But as far as regular contributions, there's no sort of tax benefit in adding to an assurance fee. As far as, you may get exemptions from the UK government, they may get extra allowances. Simply, you can add to assurance fees, and it's the best way to structure your finances. But these can be done as far as additional contributions and part of our sort of ongoing review service. Yeah.
Awesome. And so also someone's asking for advice where when it comes to sort of the lump sum pension withdrawal, like sort of, is it best to invest that in the UK or to invest that in France in terms of what vehicles are available to you?
Again, Julian, that comes down to timing. If you're taking a tax-free lump sum because your move to France is imminent, again, let's say this year or early next year, then obviously that's the right thing to do in this calendar year. You're not going to be a French tax resident this year as long as you don't move prior to the 1st of July. So you're not going to be tax liable in France for that lump sum. So again, if you're planning to move in November, December, September, or January, begin the process, take the lump sum, but certainly keep it in your bank account for now. You're not going to want to invest for 6 months, especially the way markets are. So once you've established yourself in France, got your property, you can then establish an assurance fee. Essentially, having that property allows you to have a proof of address, a fiscal residence. You can establish an assurance fee. We can begin the transfer of funds into that. But if it's short term, certainly don't look at any UK investments. Wait and then set up an assurance fee. Yeah.
So, and so actually, this is more of a broad question, but when you're dealing with clients, what's sort of one of the most common mistakes or misconceptions that you're dealing with when people are setting themselves up for moving their wealth over to France?
I think the first two main points are the pension. Everyone just assumes they have a tax-free allowance. Again, it's tax-free in the UK, but certainly not in France, similar to Spain and anywhere else. The property sale, everyone thinks they're exempt from capital gains because their main residence in the UK. Not the case in France. If you're a French tax resident, you're going to be taxed on the gain element of that property. A lot of people sort of bury their heads with their finances, and sometimes that's the easiest thing to do, right? You've spent years establishing these pensions in the UK or contributing to ISAs, and look, it's not illegal to hold an ISA or a UK pension whilst a French tax resident. It just holds no benefit, and accessing those funds really gives you a tax logistical nightmare and a real burden on your own wealth. So having that financial planning aspect of your move is key, because some people are, generally speaking, I'll just keep my ISA. I've worked hard for it. It's done 7% a year for the last 15 years. Great. Let's say Remy's offered me a low risk opportunity at 5% a year. I'm getting 7. It's irrelevant if your tax burden is 30% on the whole withdrawal amount. You might as well get 1%. So just having those conversations started, planning and making sure your assets are set up to be structured correctly in France. There's just simply lots of alternative ways to do it.
And actually, I'm sure this is the sort of thing which would come up in your fact-finding conversations when you're dealing with a new client. But if someone has the intent of sort of moving to France, but then leaving the door open to move back to the UK or to wherever their country of residence is, how different would your advice be for how they structure their wealth? Are there different vehicles where you wouldn't recommend they take them, or?
Well, it depends on the scenario, right? If you said, Remy, I like Paris and me and my partner are going to move there for a year, arguably I wouldn't establish an assurance fee for you, because if you have sufficient income during that 12 months, you're probably fine. You're going to move back to the UK, keep your existing ISAs in place. If it's a medium to longer term view, 5 years upwards, for example, or you're just unsure, then we'd certainly look at setting up an assurance fee that was internationally portable. And majority of the vehicles that we advise there's certain vehicles out of Luxembourg that are structured for French residents and will be forever. But look, essentially, that international portability is key, because if you set it up as an assurance fee in France, move back to the UK, all that vehicle is going to do is lose its assurance fee status. It's still going to be tax neutral in the UK. It's still going to hold the same benefits, and the ongoing servicing and advice continue. So it's just key to go through that fact-finding process, establish what the needs and objectives are, and the situation and the circumstances, and really marry that up with the correct vehicle or instrument.
Yeah, sure thing. So actually, one of the things you spoke about was how there have been changes made since the Labour government came in here in the UK, which have meant when it comes to moving your pension abroad that you'll be paying a new tax you wouldn't have been in the past. Is there anything on the horizon in France that you can think of which people should be aware of that might potentially come into force in the next year or two that would impact their plans for how they're moving their wealth?
Not so much France. It's again, from a French perspective, we hold our assets outside of France. But so from an offshore point of view, your assurance fee is either going to be held in Luxembourg or Ireland, for example. And again, I can explain that in more detail why. But from a French assurance fee perspective, I don't foresee much changes. The worry, I guess, people would have is from a UK or a US perspective. US, there's talk of martial law and how that will affect people's finances. The UK, there's talk on the potential of the tax-free lump sum and what if that may change, or the overall amount someone can have in a pension. It's the logistics of that. So we're always on top of all that, and we incorporate that into part of our advice. Any legal changes or updates that will have an effect on people's finances.
I suppose actually once you started working with someone and you've helped them restructure their finances, as you were saying, it's an ongoing service. It's sort of that you could be checking in with people to be, okay, there's been this change. We've worked at setting up your insurance fee in the past. Would you then be in touch to suggest, and this is how you might want to change your vehicle now?
Yeah, if you've seen markets in the last couple of weeks, I'm sure most of you have, it's been a volatile ride to say the very least. And that in the most part is the most important part of our role. If things are going well, probably don't have to speak too much. When there's volatility, that's when we're most active. Trump came out with his new tariffs, markets went into turmoil. Luckily, he sent a tweet, or I don't know what you call them anymore, a few days later, and markets bounced back. But it's very much part of the service. Now, the webinar I did yesterday is on a really sort of low risk balanced approach where it's very boring. And look, just to touch on that, my point of view from investing is very adventurous and very high risk. I'm 36 years old. I've been involved in markets from university and have a very different approach to investment. When I talk about family money or clients' money or friends' money, it's a very boring approach. I'm trying to safeguard funds in the most low risk mandate way. Obviously, people can tell me they're high risk and want a higher risk mandate, but the average age of my client is sort of 55, 60 years old. So we're looking just to safeguard funds. Now, the webinar I spoke about yesterday, as part of a review service, we don't really have to talk about it because they have expected growth rates of 5-6% a year. That's generally what they'll net. They're assurance fee vehicles, and there's not much to do. We're not set up to do all this portfolio composition and change around the funds. Yes, if you want a higher risk approach, we can have the facility to open up a assurance fee that has complete open architecture. We have access to global markets and can have different exposures to different areas. That is a bit more of an ongoing service from a quarterly at least perspective. But generally, I like to catch up with clients every 3 to 6 months. And we're not only talking about the investments, right? It's about what's going on in people's lives. Is their inheritance coming in? Are they selling houses? Are they buying new houses? Do they need to buy a new pool for their chateau in France that they've just moved to? Do they need to liquidate some funds? It's part of the ongoing servicing advice. Yeah.
Awesome. So another question from one of the viewers. And this may step outside of your remit, and so do say if we should better direct them to a different expert. But they're talking about the financial criteria for residency. And so they've heard conflicting reports about whether investment income is enough or whether you need proof of a regular income. That smaller regular income is more favourable for residency applications versus even much larger 401ks. And do you have any insight on that?
It sounds like a US inquiry, which is very different to if that was a UK inquiry. I'm not an immigration specialist, but from experience, and I work closely with Jacob, it's certainly worth having a chat with Jacob, because that's exactly what he specializes in, especially in Spain, France, Portugal, is how do you establish your wealth prior to the move to enable you to get the visas, to renew the visas, to get residency. I touched on annuities earlier. Annuities are a great form of getting regular recurring income that ticks all the boxes from a fiscal point of view, from the French tax authorities and the immigration perspective, but also, without going into markets too much, reducing your downside. And very much, just to be clear here, we have to differentiate UK annuities to US annuities. A UK annuities, 99 times out of 100 aren't good and not good advice. If they give you a really good rate, it is income for life, but the issue is it dies with you. The difference, and I'm fascinated by the options available in the US market. Apologies to my British counterparts, but the US annuities essentially have flexibility around income. You don't have to just annuitize it straight away. You can do it in 2 years, 5 years time. They also come with death benefits. So there's essentially a pot of money, let's say $500,000, that you're producing a 5% annuity out of. If you pass away, monies are then transferred over. Again, going back to markets, the 0% downside risk on those. They're with the big life insurance companies, for essentially a life insurance product. They produce a regular income. They don't have the upside of markets. They have 85% of the upside of the S&P, for example. Again, without going into too much detail, have a conversation with Jacob. Use that QR code, because he'll just get an understanding of how the assets are arranged now, what the plan is moving to France, what you need as far as an income or savings or investments. I mean, there's a lot of information online on Facebook on what's correct and what's not, but speak to an expert and he'll be able to help.
That sounds great. And actually, that's a great opportunity to remind people, those QR codes on the screen at the moment, if you scan those, you can book directly to use either Remy or Jacob's calendars and set up an appointment for that consultation. So sort of no filling in emails and forms, that's the thing, you can just book that slot immediately.
That will take you directly to our calendars, yeah. We're both out of the office next week. We've got a work trip up to Bilbao, which will be nice. But yeah, whenever there's a convenient time. Jacob's diary is normally open a bit later, so better timing for the US guys.
Awesome. So we've got another question, which is it's multi-part, so I'm going to break it down a little bit. But it's someone who currently is selling an apartment they own in Paris. They live in the UK currently, and they're wanting to see if they can put the money that they earn from selling this apartment in Paris into an assurance fee ahead of them moving to Paris in a few years' time. And they wonder if, basically, is that possible? Are you able to set up an assurance fee when you're not currently a resident there?
Well, having the property allows you to establish an assurance fee. It's probably worth a chat with myself just to get an understanding of it. We may bring in a French tax specialist. We've got a lot of contacts who specialize in cross-border advice, but generally speaking, it would have to go through the property. And if you're just about to sell it, it's probably not going to work. So again, have a chat with me. We'll see if something can fit.
Sounds good. And actually, just as well, because we've been talking about UK and the US as the main examples here, but having a question from someone asking, would you be the person to talk to when moving from Ireland to France?
Yeah, I was hoping that one of our Irish counterparts would get involved. Apologies for that presentation. It is a bit generic and it is a bit US, UK focused, but for someone in Ireland, definitely worth having a conversation. Assurance fee is certainly an option for you. Obviously, there's different pension setups in Ireland with the PRSAs and so on. And that's a bit more technical. We do have a pension transfer specialist, but have a chat with me. We'll work out what assets you've got, what the situation is regarding the move, and what options will be best suited for you. But certainly, any country from anywhere, have a chat and we'll see if we can help.
Sounds good. And so I think probably last question, because we've riddled you with questions so far. But there's someone asking about sort of essentially the process and timings of things. So their question is, can you get an assurance fee after buying a French property, but before you sell up and move? So I'm assuming this sounds like they may have already bought a property in France, and they've not yet sold their property at home. And sort of, are they already too late? What would you suggest from there?
I would get my phone out and book a meeting with that QR code. Again, a bit unsure on their actual situation. If they have a house in France and they are currently UK tax residents, with the idea to move to France, yes, it's available. You have a French address and a French fiscal residence. I wouldn't be looking to take money from an assurance fee during that period. I prefer to do that as a French tax resident. For declaration purposes, so you're not then taxed in the UK. But there's ways around it, and it's possible. But it all comes down to having a one-on-one. It's all very well and good having a broad overview here, but it's really difficult to focus on someone's individual circumstances to really give you the formal advice. We have a really strict internal compliance review process. We're a very highly regulated company, and without saying too much, we need to go through the processes.
Absolutely. So Remy, I just want to say thank you so much for first the presentation and the depth that you went into there, but then also answering all of these questions. Some of them have been very specific, some of them have been very general, and you've covered everything. So thank you so much for that. For viewers who are at home, I just want to say that if you found this session helpful, please do leave us a review on Trustpilot. There should be a link coming up soon. But also, as a reminder that this session has been recorded, it will be available to view on the website. We're also going to be sending out a link to everyone who attended today. But yeah, Remy, thank you so much for all your insightful tips and advice.
Thanks, Julian.
Sorry, no worries. And we'd strongly recommend that everyone get in touch using the links that you've shared. You also, on the previous slide, which people were able to watch the recording, shared your email address and WhatsApp number. So everyone, good luck on your French adventure, and please do be in touch if you have any more questions. Right. Thanks very much.
Thank
Bye.
you.